In this video, I'm going to be discussing reasonable compensation. If you haven't heard of that term before, reasonable compensation is the amount of wages you as the business owner should be paying yourself for the services that you provide to your business. If your business is taxed as an S corporation, or you're thinking of electing to have your LLC or corporation taxed as an S corporation, this video will be of particular interest to you. So if you continue watching, you can expect me to sort of cover the following topics or answer the following questions, which is, why is this even a hot topic with the IRS? Why is it important to pay yourself reasonable compensation? And during that part of the video, when I'm explaining all this, I'll show you some examples of why this is a strategy behind that you should be able to get behind and how it can save you thousands of dollars in taxes. What is reasonable compensation? How is it defined by the IRS and the tax code? What you should do to determine reasonable compensation for your business. And I'll wrap up by covering some reasonable compensation myths. You may have heard or been told things like your reasonable compensation should be based on your business's profitability, or your reasonable compensation should also, or I should say, always be more than the distributions that you take, or you have to take reasonable compensation if your business isn't profitable. And lastly, the last myth here, you've got to take reasonable compensation even if you don't take money out of the business. So make sure you stay tuned for those, the myth portion of the video, or where I'll sort of act as your myth buster, because you're probably going to learn a lot from that portion of the video, okay? So if it's your first time watching, my name is Navi Miraj. I'm a CPA that teaches entrepreneurs how to save thousands of dollars in taxes. And I do that here on social media, but I also teach it in an even more comprehensive and easy to understand way through my course. And you can find those details on my website, which is simply navimirajcpa.com. But for now, if you get value out of this video, if you learn something, please consider subscribing to the channel, or perhaps like it or share it with a fellow entrepreneur who's trying to figure out this whole reasonable compensation thing, all right? So let's jump right into that first question I said I was going to answer, which is, why is reasonable compensation even a hot topic with the IRS? Why is it important to pay yourself reasonable compensation? So I'm going to actually answer this question by sharing my screen with you and presenting to you some numbers so you can kind of see why the IRS cares so much about this, okay? So give me 1 second. I'll pull up a file that I created for you. Okay, so here we are. Don't freak out about this. Let me just quickly walk you through this. So what I'm trying to show here is two scenarios. So showing you if you're a sole proprietorship, right? If your business is taxed as a sole proprietorship now, that could mean you are just out there conducting business. You didn't form an entity. Or that could mean that you formed a single member LLC, then by default it's taxed as a sole proprietorship. The reason this is a hot topic is because this way, when you're taxed as a sole proprietorship, you are paying Social Security and Medicare taxes on the profit of your business. So I'm saying, hey, you went out there, you sold $125,000 of product, or you offered services and customers paid you $125,000. You might have had $25,000 in expenses, so you land at $100,000 in profit, okay? The amount of Social Security tax you pay on this is 12.4%. It's actually 6.2% from the employer side and 6.2% for the employee side. So when you're a business owner, specifically being taxed as a sole proprietor, you're paying both sides of this because you're the employee and the employer. So it works out to 12.4%. You're also paying Medicare tax, which works out to 2.9%, okay? So if you add all that together, it's 15.3%. So you take your 100 grand, you multiply it by the 15.3%, and you get 15,300. Some of you know this already, but for those that are, looking at this video from a fresh point of view, I wanted to take a moment to explain this. Now, over here in this sort of light purple color, this is what you could do if you were an S corporation, okay? So those same things apply. You still had 125 grand of revenue. You still incurred $25,000 of expenses, but now what you're doing is you're splitting up the profits into sort of two buckets, if you will. One may be your reasonable compensation bucket, and in this example, I'm saying $40,000 is reasonable. And then the other is the remaining profit in your business, which is $60,000 in this example, which can be taken as a distribution if you desired. You don't have to take this amount out as a distribution if you don't. Now, I think it makes sense to mention this text box that I have down here. You'll still have to pay your federal and state, assuming you're in a state that has state income tax, on the $100,000 of profit. But this presentation is focusing on the Social Security and Medicare tax differences. So what I'm trying to point out here is I don't mention federal or state income tax in this presentation, but because this whole S corporation thing and reasonable compensation thing is all related to Social Security and Medicare taxes, okay? So let me continue on with the example. So in this example, we're saying that John, the employee, who decided that $40,000 was reasonable compensation for him, is gonna pay his share of Social Security and Medicare tax. And then John, being the owner of his S corporation, right? He's the employee, but he's also the employer. His S corporation is also going to pay Social Security and Medicare taxes, right? And so when you total all this together, you get $6,120. So if you do the math there, 15,300 minus the 6,120, that could be a potential savings of $9,180. Now that is not exactly how the math works, but I'm just kind of showing you an example. And so that's kind of what you can look forward to in terms of tax savings, right? So, but what happens if you take zero reasonable compensation? Well, now the remaining profit in your business is 100 grand, which you could take as a distribution if you wanted to, or you could leave it in the S corporation, okay? But if you do this, what happens? Well, now you don't pay any Social Security and Medicare taxes, and therefore your savings is the full $15,300. Or let's say you came up with a number that was 80,000. Let's say someone told you, oh yeah, your reasonable compensation should be 80 grand if you're making 100. Well, that eats away at your savings here, right? Because now the math is that you're paying total Social Security and Medicare taxes of $12,240, and your potential savings is around $3,000, right? So this is why, nailing down this reasonable compensation number, and the reason for me creating this video, right? The IRS doesn't want you saying zero, because you're not paying Social Security and Medicare taxes if you do so. But you, right, you don't want to be saying it's 80 grand because, your S Corp tax savings is then eliminated. So you need to figure out what reasonable compensation is for your business. So I've used, I don't know how many times, the term reasonable compensation quite a few times by now in the video. Let's see how the IRS kind of defines this number, okay? So kind of done with the Excel stuff here. Let me kind of pull up my web browser and we can look at these things together, okay? So the IRS in code section 162-7B3, that's a mouthful, but I've got it pulled up on my screen here, right? And I'm not necessarily paraphrasing, but I'm taking out this part of the sentence in particular. Reasonable and true compensation is only such amount as would ordinarily be paid for like services by like enterprises under like circumstances, okay? Written exactly how you would expect an attorney to sort of write something like this, okay? Let me show you the instructions on the 1120S, which talks to this as well. It says here, where the compensation of officers would normally go, it says, distributions and other payments by an S corporation to a corporate officer must be treated as wages to the extent the amounts are reasonable compensation for services rendered to the corporation. Okay, so I just wanted you to see, how the IRS sort of defines reasonable compensation. It's not clearly defined because there's different circumstances and factors that go into this, all right? So, one of the questions I said I was going to try to answer is, what should you do to determine reasonable compensation for your business? And, in my opinion, I can't really answer this question in a video. What I can do is give you some factors considered by the tax courts in determining reasonable compensation, and there are 9 or 10 of them, right? So I've got them pulled up here so we can kind of look at them together. I'm not going to read all of these out to you. Like I said, there's 9 or 10 of them here, but the first 3 are probably the most important if you have a small business where you are still performing a lot of the services, or you're the primary reason or the primary person that's involved in generating revenue for your business, okay? So number one here is training and experience. So what is your training and experience, right? If you're a physician, you have a lot more training and hopefully experience to go through compared to that of someone that might be an auto detailer, all right? And that's not a knock on, obviously, the auto detailer or that industry. I'm just saying the barriers to entry to be a physician require a lot more education and training than that of a a professional auto detailer, okay? What are your duties and responsibilities? That's the second item on here, right? Are you the janitor in your business sometimes? Are you also the bookkeeper? Are you also the sales rep? Are you also customer service? Are you the main service provider? And you can go on and on and on, right? How many hats do you actually wear in your business? You're probably spending a lot of hours per week working on non-revenue generating activities. Then if that's the case, perhaps your compensation should be lower than someone who's providing the main service your business offers all day. Am I making sense there? I'm saying, if you worked 40 hours a week and all 40 hours a week, you are actually detailing cars, your reasonable compensation might be different from someone who, they do all the detail work, but they also do all those things I mentioned before. They clean up their shop, they do the bookkeeping, they, do other things in the business. They answer the phone, all of that stuff. It's all different, okay? What is your time and effort devoted to your business? This is a big one, right? How many hours per week do you do this particular service, okay? Are you working 10 hours, 20 hours, 40 plus hours? This all will determine how much compensation is reasonable for you, okay? So admittedly, you really need one-on-one or a one-on-one consult with someone who has experience with this to determine what your unique reasonable compensation should be. And in my course, I don't really present, I can't work one-on-one with you in a course. It's more like one on many, right? And so what I do to you in the course is I present to you sort of a general framework that I learned over the years, and I share that with you, okay? And it will help you determine sort of a safe amount of payroll to be running depending on the distributions you take from your business. But if you really wanted to dial it in, a reasonable compensation consult would be a good idea. If you visit my website, which is, again, it's navimuradcpa.com, you could see more about the course there. So to give you an example, you can read, what it is that I'm covering, what it is that you're going to learn, how much it's sort of the course costs, right? Don't worry about these prices you see here. There's currently a major promotion making it about a third of the cost that you see here. You can watch this video to go through all of the course contents, which is listed here. You can see it's very comprehensive. We talk about a lot of things, including, payroll and how much to pay yourself, okay? So, let's cover the reasonable compensation myths, okay? Reasonable compensation myth number one, your reasonable compensation should be based on the profitability of your business. Okay, so you do not set your reasonable compensation based on the profitability of your business. The reasonable compensation amount is determined, and if done so correctly, would be the amount you pay yourself whether your business earns $100,000 in profit or $500,000 of profit, okay? Maybe you didn't kind of catch that. I'm saying you work with someone or develop what the reasonable compensation is for your business, and then regardless of what the profit is, that is the number. That's how much you should be compensated for the service that you're performing to your own business, okay? Let's use an example here. Let's think about this for a moment. Let's say I'm a social media influencer, and because I have a large following, a company wants me to post some content about their product or their service, right? Well, if it takes me 10 hours to produce that content on social media, and based on the amount of additional sales I brought to that company, they decided to pay me 100 grand. Does that mean because my business made 100 grand in profit that my reasonable compensation should be something like $40,000 or $50,000? I work 10 hours, right? So, or another example, what if the company paid me double and it was $200,000? Does that mean that my reasonable compensation also, must double? No, right? It really wouldn't make sense. So in general, reasonable compensation is not determined simply on the profitability of your business. Let me give you one more example, okay? Let's say you sell a product and you figured out a way how to use social media, okay, or let's say ads in particular, and the more money you spend on Facebook ads, the more money you make. Well, you've already created the product, okay, and you're really leveraging technology and social media and the amount of dollars you spend on ads to generate your profit, okay? So if you decide to spend $1,000 a day on ads, then you make more money because more people are seeing your product. Does that mean that your reasonable compensation should then be higher based on the fact that you decided to spend more ad dollars, which thus created more revenue and more profit for your business? So that's just another example other than the sort of the social media influencer example that might resonate with you, all right? And so maybe, by the way, if you'd like to contribute to me one day being a social media influencer, go ahead and subscribe rather to the channel, okay? There should be a button, somewhere down there for you to subscribe. So, okay, let's go to reasonable compensation myth number 2. And that is your reasonable compensation should always be more than the distributions that you take. There is no rule out there that says your reasonable compensation must be higher than your distributions. Similar to what I mentioned before, your reasonable compensation could be determined or could be determined to be $100,000. And you could distribute $200,000 if you wanted to. In that scenario, your distributions would be 2 times that what your salary is, right? And you wouldn't have a problem. So it's really a myth to say, your reasonable compensation should always be more than what your distributions are. Okay, reasonable compensation myth number 3. You have to take reasonable compensation even if your business isn't profitable. Think about this, all right? If your business isn't profitable, then how would the business even have enough money to pay you reasonable compensation? As long as you don't take distributions out of the S corporation, then you don't have to run payroll for the employee shareholder, okay? I guess if you took out a loan, there could be money in the business that you could distribute to yourself, but that actually opens up a whole nother can of worms outside the scope of this video. As a hint, that could lead to what's called distributions in excess of basis. And if you do that, you'll actually end up having to pay some capital gains. So don't actually do that, okay? Let's go to reasonable compensation myth number 4. You must take reasonable compensation if you don't take money out of your business. I alluded to this earlier. If you do not take distributions out of the S corporation, you do not have to pay yourself reasonable compensation. Let me say that one more time. If you don't take any distributions out of your S corporation, then you actually don't have to run payroll. You don't have to pay yourself any reasonable compensation. However, let's assume your business earned $150,000 of profit, and you determined reasonable compensation would be $50,000 based on your consult that you had with someone, okay? But you decided not to take any distributions at all. That would be just fine. But what you have to keep in mind is, let's say you do that for year 1, and then you do that again for year 2. And in year 3, you run your business just as normal. But in year 3, you decide, okay, I need to actually take some money out of the business now for the very first time. Well, in year 3, you actually want to pay yourself $150,000 in reasonable compensation. That's 3 years times the $50,000 of reasonable compensation that you determined, okay? And then you can take the rest, the remaining $300,000 as a distribution. If that confused you, all I'm trying to say is don't think you can just take $50,000 of payroll in year 3 and take $400,000 out in terms in distributions, right? You have to sort of make up for those other years where you do not take any payroll or any distributions out of the company. Okay, so I think that pretty much discusses all the points I wanted to about reasonable compensation. If you're watching on YouTube, I'll link the video on what to do if your business is taxed as an S corporation and you didn't run payroll, but you should have, okay? That video discusses a workaround on how to handle that scenario. And also I'll link another video I recommend watching based on the fact that you watch this one, all right? And before you leave, don't forget to like and subscribe, and I'll see you in either the course or the next video.